Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, so we're going to be looking here at MJX, WEED, APH, ACB, MJN. Going to be talking about some stuff. I've got a trade game plan for what I'm going to be doing. I'm going to share it with everybody. We were going over it all day in the chat room at the end of the day because there's an opportunity approaching, and technical analysis has allowed us to capitalize on these opportunities in the past, so we're looking to do it again. Many of you will remember when we had WEED on this all-out dump. And if you want to go back and look at the video from January 12th, we were establishing a game plan, and the chat room and everybody, we absolutely nailed this bounce by looking for a similar play that we're going to look for now. And I'm going to go into in-depth as to what I'm looking for. But this move, we saw a move of about 20% in one day. I don't think the move's going to be as significant, but I see a significant opportunity approaching, and I'm positioning myself in a game plan for that. So a couple things first to go over. Obviously, the sector is bearish right now. We could see that where we started pulling back. We hit a temporary little euphoric top, and we started pulling back, led by WEED and APH. They started pulling back first. The ACB acquisition hype has now worn out, and that is wearing off, and we're pulling back there as well. So a lot of profit taking going on. Individual names, the small names are doing, some of them are doing their own thing. Some are holding up better than others. I'm interested in the whole sector as a whole right now, and these major names are obviously the biggest factors in the sector. So we have an attack going on, and not really an attack. This is what market makers do. Market makers make the most amount of money by causing euphoria and fear. When things are going up, they want everybody to think everything's great, and then they're selling as close as they can to the top. And when things are going down and they want to reload, they're creating as much fear as possible, getting that extreme last flush, and then jumping in to capitalize on a strong bounce. We saw the exact same thing again on WEED from the top. Euphoria, all-time highs. Looking for the pullback, we dumped significantly, and then we had a very strong bounce. So I'm looking for this same scenario to play out. And of course, CNBC today, after hours, look what they put out. They had a segment on shorting marijuana stocks. Number one, in the US, most people can't do this. You cannot short over-the-counter stocks, which are the US equivalent tickers. You can't do that in the US on most brokers. And also in terms of shorting the Canadian names, you can't do that in most brokers. And even if you could, you have a 2% or whatever it is, currency conversion fee to get to CAD, and it's just that's a barrier to entry. But here you go, you know, they're spinning everything in the market with news is timed, unless it's like a leak or breaking news. If a company is releasing something, or if a group is releasing something, like right here on CNBC, the timing is intentional. So there's no just like, oh, let's put it out right now. Time and time again, you know, we had the Citron attack on ACB. They do that in the stock market all the time. I've looked at charts. I've seen overbought conditions. I've seen, you know, clear signals that we were going to pull back. I was thinking specifically of Tesla when they attacked Tesla. And it was like a very clear technical signal to take profit and look for the bears to show up. And then they did that, and then they put out their article, and then they smashed the price down for a couple days, and then they cover. So it's an orchestrated event by groups and by market makers, and everybody's looking in one direction, and they're going to maximize it to the downside and create as much fear as possible. So in my opinion, this news right here on CNBC is going to sucker in the last amount of people. And I'm looking for this bounce to start tomorrow. And if it doesn't start tomorrow, I'm absolutely going to protect myself, take a small loss, and then reestablish the situation, because we know a bounce is coming soon, and I'll explain why in just a moment. But this, in my opinion, is the last suckers on board. And this is the short saying, hey guys, come, you know, short right here so we can rebuy our shares into your shorting and find the bottom and then bounce. So I do believe that this is, I mean, anybody that's going to listen to CNBC and say, oh, I should short some Canadian marijuana stocks because they can't sell in California. Anybody that's saying that is already a sucker. And this is just going to get them in terms of shorting when we are way oversold on the hourly time frame. I would never short in a million years. Even if you told me some terrible news, I would not short at the levels that we are currently at. So this is just bad advice. I assume they have to know it's bad advice. And here we have the response of Aurora, where they say we don't worry about the shorts. They keep having to cover repeatedly, and that's definitely true. So what I'm looking for Let's go into the technicals now. That's the psychology of what I'm anticipating and what I'm seeing happen. And right now on MJX, we are pulling back. We set a higher high on the daily chart, so we are still in a very strong uptrend, and anything above 32.93 will maintain this uptrend as a higher low. So we could pull back all the way down to $35. That's still a higher low. So that's definitely something to keep an eye on. The hourly chart, or the hourly RSI, is just getting oversold. I'm looking at hourly RSIs on all of these individual names, and MJX hourly RSI, when it has gotten oversold in the past, I always look at historical examples, and since it has been trading MJ, we have seen the RSI get oversold a couple times, but very briefly, it leads to a big bounce and a short-term bounce. So there were two little dips underneath. So the bottom line is, if we start tomorrow with a gap down, as I am assuming we will, if it's not a gap down, I expect a lower open and to test the bottom. And if the double bottom, the low of yesterday, holds, I'm referring to WEED right now with my game plan. Let's just go over to WEED. So what I'm looking for, look at comparing the past. Gap down, third gap down. Bulls bought it with a 20% move, and they didn't even need a lot of volume to do it. Here we have a lower open. It's not exactly a gap down, so lower opens, and a gap down here. And we're looking for a potential of a gap down open today. Now, if we don't see a gap down open, I still expect a lower open and to hit that 3109 level and watch and see if the bulls can form a double bottom and have that be the rally point. I do expect things to turn around very quickly tomorrow from, looking grim first thing because the market makers open the price where they want to and likely give us a gap down with some, motivation by these people on CNBC. I would love to see that. I am in a half a position right now because I'm planning on going big on this trade and I wanted to scale in. I've been very frustrated, speaking of market makers, I've been very frustrated trading these OTC names because these market makers are, without a doubt, in my opinion, this is my opinion, but they are manipulating things very, very clearly. The fact that I can do a market order and sometimes it takes 3 seconds to go through and other times it takes over 3 minutes is not just the way it goes. These market makers have no law that tells them that they have to give us the best fills. If I place a market order, the market maker can sit on that as long as he wants. He has every right to. It's, there's no law against that. So in my opinion, I'm just giving an example. ACB the other day, ACB was running up. This is the day before the news came out. So we were running up towards the all-time high. 1488 is, I believe, the level. We hit 1488 and we pulled back. And then on the second attempt, this was the day before the news came out, was the second attempt. I had swung a position. I was looking to scale out into strength. So I placed sell orders, both limit and market sell orders, that were completely skipped for minute after minute after minute while the price continued to go up. And then the price hit the double top and started to pull back. And only did I get filled on the way down when the market makers already formed their double top and wanted the momentum to shift back to a pullback. All of my orders got filled on the way down. And in my opinion, I was intentionally skipped over to not slow down any bull momentum, hit the market maker's target, and then lead to a pullback. So I am already well aware that these market makers are doing what they want to. So I am anticipating a gap down open tomorrow. And if not, we're looking for a lower open. And that's a buying opportunity in my opinion. Like I said, I'm already in half a position because I do not trust the market makers to fill my entire position if it is a mad dash for the bulls first thing tomorrow morning, which is a possible setup. So because this hourly RSI is already so oversold, here it is at 20. We hit 20 and had a weak bounce and then dumped down to lower lows. We're at 20 again. If we see a gap down open first thing tomorrow morning, and this is the TradingView RSI, my Fidelity RSI right now on WEED is about 13 or 14. So there are differences on when the candle opens and closes. On Fidelity, it's on the half hour because the trading day starts at 9:30. So it closes at 10:30. Here it's on the hour on the dot. So there are differences in the numbers, but we can clearly see we're very oversold. And I look back historically and can see that we have not dipped below this RSI level of 20 on this entire uptrend. So once we found the uptrend back down at $7 on WEED back in the summer, our summer low, since that uptrend has started, the RSI has touched 20 and bounced for continuation, and it's touched 20 a couple times above 20, but here it is, the lowest it has been since then. So if we see a gap down open, this RSI is going to be down in the teens and the lowest that it has been on this entire uptrend. And I look back historically and say, even when we were in a downtrend, when the RSI dips below 20, it is very brief and it leads to some pretty sharp bounces. I can look at a different time frame and look at the 4-hour RSI and see that here on the 4-hour chart, we have an RSI just dipping under 30 right now. It is currently sitting at 28. With the gap down open, that 4-hour RSI will be at about 26 or so. And we scroll back and say, what has the 4-hour RSI been doing? We have not dipped below 30 on the uptrend since the summer turnaround. And when we're in a downtrend in the summer, we touched 20 a few times and then bounced. So even if we do flush down and see a quick dump first thing, the RSI levels are going to get to extreme catapulsion. I'm saying that word wrong, but a turnaround that is a maximum climax of bear volume and then quick bull volume. That's why volume climaxes signal the top and the bottoms, because it's the most activity in both directions at the same time. So meaning just like all bears and all bulls battle at the top or bottom, and then it shifts momentum. So that is what I'm looking for. I'm looking for a gap down open. I will initially enter a position right at the open if we get the gap down open. Then I will have cash on the sideline, and I will be ready to continue adding if we see a little bit of a prolonged dump. I would be shocked if we saw a gap down open and then bearish action continue more than 15 minutes in the morning. If I am wrong on this trade, I will protect myself and take a small loss and then look to re-enter once I see the first glimmer of hope for the bulls. But again, I just wanted to point out the last time that this happened, look at the 5-minute time frame. The last time we had that dump and bounce, we had the gap down open, and in the first 5 minutes of trading, we went from 29.50 to 32.35, a 10% bounce in 5 minutes, which is why I want to be quick on this. So I'm going to be acting on a gap down open. I will initially right away place an order, and I will hold cash to be a little bit protective to see if we continue to pull back for the first 5-10 minutes of the day. Because once the momentum shifts and the bulls start heading up, it's going to be really hard to get good fills. We're going to see market orders drive the price up pretty quickly. My target on this trade, I'm looking for the price. Sorry, going back to the hourly here. I'm looking for the price on this oversold bounce to make its way to $34, $35. And I think that's a pretty conservative estimate. I'm not saying we're going to go there tomorrow, but I'm saying that on this daily chart, here's another point I'm missing. On the daily chart, we're looking for a higher low here. 29.50 is our key of support. Everybody's talking about this bearish reversal head and shoulders pattern. So we're coming down to this key level. I would anticipate this daily chart to be an equilibrium pattern and form a higher low and see a bounce and then form a lower high in the $34, $35 range. So that's what I'm looking for. And even if 29.50 does break, if that support breaks tomorrow, these hourly RSI levels are going to be at the most oversold conditions that we've seen in the past year of trading, and it will be a very unusual event. It's possible. Again, it's a scenario that could happen. We could see RSI levels. Normally, we see RSI levels that are extreme when there's news and reason for it, and the market gets over fearful. And here we don't have that. Obviously, if we were to see a news come out tomorrow, that would change the whole scenario of what I'm saying. But the RSI levels, if we drop down to significantly oversold levels and break 29.50, we're going to have these hourly RSIs in the single digits. I am very comfortable in the Canadian MJ sector with hourly RSIs in the single digits. So once we do begin to bounce, I will scale out of my position. I'm not just going to pick a target and try and exit my entire position on the top of the bounce. I'm going to scale out because I'm planning on taking a large position that will allow me to break it up into probably 5 different sell orders. And I will scale out a little bit on the initial bounce, because once the bounce first starts, we're going to get that 5-minute time frame where we get a big strong move, and then we're going to start to pull back, and the bulls are going to have to form their higher low and then their higher to high to give us confidence that the bounce is really following through now and the momentum has shifted in the short term. So I do take some initial profit to protect myself and to lower my cost basis to where break even is, and to allow myself more wiggle room and more comfortability in the trade. So, and then I will slow down my scaling out the stronger the bulls do appear. So that's where we stand right now. The market, everybody, you know, this is fear at the climax, and this is when we're buying. This is our opportunity. So we're looking to have a very similar play like we saw last time. Again, it went extremely well last time, and I am anticipating a very similar kind of play this time around. The market makers know how to make their money. They made a ton of money this last time, and they're going to try and do the same thing again. The only question is going to be, how extreme can they push it down? How much selling pressure can they gather together on this last little push down to try and allow them to cover? So let's see how this goes out tomorrow. It's going to be a lot of fun. Man, I have a lot more analysis to do. So APH, it's going to be very similar. It's not as oversold on the hourly time frame, which is why I'm choosing WEED, but it's all going to correlate, and it will bounce as well once WEED does. But I am anticipating a higher low here as well, 1660. So that's important. If we hold 1660, anything above that level is a higher low on the daily and would stay in this equilibrium tightening pattern as I am anticipating it to. And that is a play as well. You could play APH if you wanted to spread out. Maybe you go half WEED, half APH. ACB is a completely different scenario because we're coming off the news. We're coming off of the all-time high, and we are not anywhere near the same RSI levels. We will likely bounce with ACB the same as the other two once it gets going for the sector. But because the setup is different, I'm going with the most beat up name, looking for the biggest spring back in terms of a bounce. MJN, same thing. It's not really anywhere near as oversold. Key support is 960 to maintain the daily high or low. Bulls would ideally want to hold that level, and we're going to be coming down to test it. But we look at the hourly time frame, it's not nearly as oversold. It's not even oversold at this point. So I am establishing my game plan around the oversold conditions of the sector leaders, some of the sector leaders here, and because they don't meet that criteria, I'm not currently interested in them. But again, they will see some upside with the correlation of the entire sector as a whole. MJX, hourly time frame, again, we see a gap down open tomorrow. We're going to be oversold on the hourly, and we've watched bounces occur when that happens. So we'll be watching MJX for signs that the sector is seeing a bit of a bounce. We can often get clues from a MJX, and all of my focus tomorrow morning will be on WEED, and we're looking for the volume climax and a turnaround from bearish to bullish momentum. 5 red days in a row. Let's see when the last time that's happened. 5 red days in a row has not happened since the uptrend of the summer. So again, we're getting a lot of signals that haven't happened in a really long time. And could this be the top? And could we see a prolonged downtrend or pullback for the next 3 months? Absolutely. I've been saying in my videos, we have a long way to go to July. We have 6 more months. We could very easily pull back for multiple weeks. I've talked about how I'm not telling my friends to enter long-term positions when the weekly charts are up this high. I'm looking for weekly consolidation to do that. And this is very healthy consolidation at this point. And this weekly chart could pull back to $22 and still be extremely healthy. So we absolutely could break this daily chart bearish and, you know, see lower highs and lower lows. My whole premise of this trade is the shorter term oversold conditions, watching the market makers do something that they just did 2 weeks ago and looking for the same kind of result. And then we could bounce and set a lower high and then dump down to lower lows and do it all over again. So that's the game plan. Everybody do your own. I'm not telling anybody to do anything. Everybody do your own, establish your own game plan on how you're going to play this and have different scenarios. If X happens, I will do this. If Y happens, I will do this. I feel the most likely scenario is a gap down open, a quick initial push to the downside, quick being the key word, and then bulls piling in on a bounce where shorts cover and bulls buy the dip, and we see a very solid turnaround. And that turnaround could last a day or two while we make our way back into the equilibrium pattern on the daily time frame. Another possible scenario is we see a open right near the low of yesterday, or today I should say, and we hold that double bottom, and then the bulls buy, and that gives the bulls even more confidence. There's our double bottom, shorts scramble to cover, bulls buy the dip. That's a possible scenario. Pretty much depends what the market makers want at this point. There's no pre-market volume. They can open the price wherever they want. So those are the 2 scenarios. The third scenario, we see an open, we have a slow bleed down. I want these climaxes. I want fast flushes. I want volume, lots of volume. When there's these slow bleeds with small bounces on the way down, that's how I know we're not near a bottom just yet, because that's how we can stay going in a little downtrend, because those small bounces cool off the shorter term RSI levels and allow for further downside. And we saw that here right at the end of the day, this bear flag at the end of the day. At that point, look at the RSI. The low, the 5-minute RSI was down in the teens. That's extremely oversold because we saw a half-hour bear flag bounce that didn't do anything for the bulls. It just cooled off the RSI back up to 35, 20 points gained in the RSI before another flush to the downside. So I want to see the flush in the climax and the quick turnaround, and we'll know the trend is turning around when we get 5-minute higher lows and higher highs, and we break, 15-minute lower high patterns. Hourly chart looking at resistances. Key resistance, the high of the bounce earlier. So I'm looking at WEED 33.93 will be a level I'm keeping an eye on. And for APH, if you're looking at the hourly bounce attempt, it's right up here at 20.05, 20.06. Those will be key resistances as well. So that's a lot of talking. Hope you learned something. Let's see how it plays out. We'll check back in soon.